You are listening to Uranium Spotlight, your weekly podcast on the forces shaping the global uranium fuel market, sponsored by Purepoint Uranium Group. Uranium Spotlight isn't just a podcast, it's a platform. Visit uraniumspotlight.com, featuring in-depth market briefings, sector analysis, and the free Uranium Investor Foundation series. Essential reading for understanding today's nuclear fuel landscape. If uranium matters to you, you're in the right place. And now, your host, Chris Frostad.
It's April 14th, 2026, and this week on Uranium Spotlight, spot prices edge higher on thin volume. Orano looks to Bostwana for supply security, U.S. production ramps with a new ISR mine, and Purepoint expands the Nova discovery at Dorado. The uranium spot price closed last week at $85 a pound, up modestly from $84.55 at the start of the week. Despite the gain, market activity was notably subdued, with just 5 transactions totaling roughly 425,000 pounds completed over the period. Early in the week, pricing held steady as bids and offers remained largely unchanged. It wasn't until midweek that a number of small transactions combined with renewed bid interest began to lift prices incrementally. By Wednesday, the market had moved higher, and by Thursday, a final transaction pushed the weekly price to $85. What stands out is not the volume, but the resilience. Even in a quiet market environment, with many participants sidelined by broader financial volatility and geopolitical uncertainty, prices continued to grind higher. Financial participation remained present, though somewhat constrained, with limited capital inflows still supporting incremental purchases. In the term market, activity was even more muted. No new contracts were reported, but utilities remain active beneath the surface, evaluating offers and preparing for longer-term procurement cycles beginning later this decade. For investors, the key takeaway is that even minimal buying pressure is enough to move prices higher in a thin market. That's typically a precursor to stronger moves once volume returns. France and its state-backed nuclear company Orano took a significant step last week towards reshaping their uranium supply chain, turning their attention to Botswana as a potential long-term source of production. Botswana is not traditionally known as a uranium jurisdiction. Historically, estimates of its uranium resources sat around 200 million pounds. That changed with the discovery of a massive deposit, pushing potential resources to over 1 billion pounds and placing the country among the more significant undeveloped uranium regions globally. Orano has already secured exploration licenses covering approximately 15,000 square kilometers and has begun engaging diplomatically at the highest levels. The strategic motivation is clear. Following the nationalization of its assets in Niger, including the loss of control over the Somer mine, Orano is now forced to rebuild its supply base in more stable jurisdictions. Botswana offers exactly that. It's one of Africa's most stable democracies, with a history of political continuity and a strong mining framework. At the same time, declining diamond revenues are pushing the government to diversify its resource base, making uranium development increasingly attractive. However, challenges remain. Attempts to develop uranium mines in Botswana date back more than a decade, with slow progress due to regulatory, economic, and infrastructure hurdles. Moving from resource to production will require significant capital and time. For investors, this matters because it highlights a key reality in the uranium market. Replacing lost supply is not immediate. Even with strong political support, new jurisdictions take years to deliver material. That reinforces the structural supply gap and supports higher long-term pricing. In the United States, Uranium Energy Corp marked a major milestone last week with the startup of its Burke Hollow ISR operation in Texas, the first new uranium mine in the country in over a decade. Burke Hollow is designed as an in-situ recovery operation, a method that extracts uranium by circulating solutions through the ore body rather than traditional mining. This approach reduces both environmental impact and upfront capital requirements, making it one of the more scalable production models in the current market. The project hosts approximately 10 million pounds of uranium resources and will feed into UEC's hub-and-spoke system, with processing handled at the Hobson facility. That plant alone is licensed to produce up to 4 million pounds annually, giving the company significant growth capacity. Strategically, this startup comes at a critical time. The United States is facing increasing pressure to secure domestic uranium supply amid geopolitical disruptions. Russian uranium imports are restricted, production in Niger remains uncertain, and Kazakhstan's stability has come into question in recent years. At the same time, demand is rising, both domestically and globally, driven by reactor restarts and new build programs. The U.S. operates 94 reactors, and without a meaningful increase in domestic production, it remains heavily dependent on foreign supply. For investors, this matters because it signals a shift towards rebuilding domestic supply chains. However, even projects like Burke Hollow are relatively small in the context of global demand. The gap between supply and demand remains significant, reinforcing the need for sustained higher prices to incentivize additional production. Purepoint delivered one of the more compelling exploration updates in the sector last week, reporting results from its winter drilling program at the Nova discovery on the Dorado project. Across 9 drill holes totaling just over 5,200 meters, the program successfully extended uranium mineralization and confirmed a growing geological system along a 1-kilometer trend. 6 of the 9 holes intersected mineralization with standout results including 17,700 counts per second over 1.8 meters and peak readings reaching 73,100 counts per second. These are not isolated hits. What is becoming increasingly clear is the continuity of the system. Step-out drilling continues to expand the footprint, while alteration patterns and structural controls are now better understood, providing a much more defined and refined targeting framework heading into the next phase of drilling. Importantly, the discovery remains open in multiple directions, along strike, at depth, and at the unconformity. That is exactly what you want to see at this stage. It suggests the system has not yet been constrained and that there is meaningful room for growth. This program also sets up the next phase. A mobile MT survey is planned across the broader Dorado property this spring, which should further enhance targeting ahead of summer drilling. For investors, the key takeaway is this. Nova is transitioning from an early discovery into a defined and expanding system with scale potential. Consistent mineralization across a kilometer trend, supported by strong grades and improving geological understanding, is how meaningful deposits are built. This is exactly the kind of progression that can drive a re-rating as the market begins to recognize the size and continuity of the opportunity.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by Purepoint Uranium Group. While our passion for the sector is undeniable, nothing discussed here should be considered investment advice. Our mission is to provide a clear, balanced view of the forces influencing uranium prices and the nuclear fuel cycle. For deeper analysis and market briefings, visit uraniumspotlight.com. Join us again next Tuesday for another edition of Uranium Spotlight.